Welcome everyone to the 80th episode of Kanga Crypto News, your weekly source for concise, dependable updates from the crypto world. I am Kuba, here to deliver the latest developments and the stories that matter the most. Before we begin, a quick reminder, everything you hear on Kanga Crypto News is compiled by our expert Kanga analysts using trusted sources only, but this is not an investment advice. We release new episodes every Friday. If you want to stay on top of the key moves in crypto, subscribe to the channel and tap the notification bell so you never miss an important update. Now, let's dive in since this week's crypto headlines do not disappoint. Trump pardons CZ and the crypto world lights up. The Trump administration handed Binance founder Changpeng Zhao a full pardon, wiping clean his 2023 guilty plea over US anti-money laundering violation. CZ had already served his 4-month sentence and paid part of Binance's $4.3 billion settlement. Supporters framed the move as crypto vindication. Critics called it favoritism. BNB jumped 8% after the news, and traders read it as a sign of Trump's softer stance on digital assets. Still, legal experts reminded everyone a pardon raises a record, not regulatory scrutiny. The bigger story, America's crypto policy may be shifting from punishment to partnership. Bitcoin's new floor, Standard Chartered says $100,000 may be the bottom. Jeffrey Kendrick at Standard Chartered dropped a bold note. If the US-China trade thaw holds and the Fed cuts rates again, Bitcoin might never dip below 100K. Over the weekend, both countries signaled tariff detente and markets exhaled. BTC rebounded to 115K, gold outflows hit $2 billion, and ETF inflows hinted at a renewed confidence. Kendrick argued the halving cycle is dead. ETFs now steer price momentum. With another rate cut expected this week, he closed with a mic drop. Bitcoin may never go below $100,000 again. American Bitcoin Corp doubles down and invents a new metric. ABTC, co-funded by Eric Trump, added 1,400 BTC, lifting its total stash to 3,800. It's also introducing Satoshis per share, a transparency tool showing how much Bitcoin backs each share. Since its March funding, the firm sprinted from 0 to 26th largest public BTC treasury, leveraging both purchases and self-mined coins for cheaper acquisitions. Mining, they say, keeps their cost base lower than peers buying on the open market. In short, ABTC is turning Bitcoin accumulation into a corporate KPI. Strategy Incorporated keeps stacking. Slow and steady wins the block. Michael Saylor's Strategy Incorporated bought another 390 BTC. The firm now holds 640,000 BTC worth about $47 billion. It's the same playbook. Small, rhythmic buys using dollar cost averaging, not big splashes. The company's year-to-date Bitcoin yield sits near 26%, proving that relentless accumulation still beats market timing. With corporates eyeing digital reserves, Strategy remains the benchmark for Bitcoin as a treasury asset. Furthermore, SharpLink loads up on Ethereum and cashes big paper gains. SharpLink Gaming grabbed 19,000 Ethereum from a FalconX wallet, pushing its reserve to $3.5 billion, second only to Bitmine. Corporate Ethereum treasuries now hold nearly 6 million Ethereum in total, 5% of supply. The move followed SharpLink's $76.5 million equity raise and $400 million institutional commitments, giving it room to keep buying. Since June, the firm's Ethereum stack has gained $900 million in unrealized profit. Even with Trump floating new China tariffs and seasonal softness ahead, corporates are clearly betting Ethereum long game isn't over. Meanwhile, JPMorgan to accept BTC and Ethereum as loan collateral. Yes, that JPMorgan. By year-end, the bank will let institutions borrow cash against Bitcoin and Ethereum holdings, safeguarded by a third-party custodian. Jamie Dimon, once Bitcoin's loudest skeptic, now calls it a freedom-to-choose issue. Demand from clients made the move unavoidable, with Morgan Stanley, Fidelity, and BNY Mellon expanding crypto services too. Wall Street's anti-crypto era looks over. Regulations are finally catching up, and banks are turning those pet rocks into loan collateral. In other news, Buterin versus Yakovenko, the L2 security war ignites. Vitalik Buterin says Ethereum's layer 2s inherit the mainnet's finality. Even a 51% validator attack can steal user assets. Solana's Anatoly Yakovenko disagreed hard. He likened L2 risks to bridge hacks, citing centralized multisigs and opaque off-chain logic. He even floated making Ethereum and L2 to Solana via new bridge tech. With 150 plus Ethereum L2s holding $35 billion TVL, the debate hits core nerves. Can you scale without sacrificing trust? The jury and the validators are still out. BNB lands on Robinhood and Coinbase, a double debut day. BNB, the world's fourth crypto, just got dual listings on Coinbase and Robinhood. After months of rallies from $500 to $1,300, it now trades near $1,100 with a $150 billion market cap. For Robinhood's 27 million users, that's a big expansion. The platform's crypto trading volume hit $8.6 billion in August, and CEO Vlad Tenev says tokenization is like a freight train, it cannot be stopped. BNB joins Zora in the lineup, signaling Robinhood's intent to marry retail hype with real tokenized utility. Coinbase, however, builds privacy and buys Echo for transparency. Coinbase's base network is getting private stablecoin transfers thanks to Ironfish tech, zero-knowledge proofs plus view keys that let users selectively reveal data to regulators. The balance: privacy for users, visibility when legally required. CEO Brian Armstrong says the feature aims to protect people's finances without fueling illicit use. Alongside Coinbase bought Echo, Kobe on-chain fundraising platform, for $375 million. Echo's tools have raised $200 million for an early-stage project. Together, privacy and transparency are Coinbase's new twin pillars, shielding users while opening fundraising rails. So the overall vibe? Crypto's center of gravity keeps shifting, from punishment to policy, from speculation to structure. Trump's pardon shows politics now moves markets. Institutions are deepening exposure, banks are onboarding collateral, and corporates keep stacking. Even with debates over L2 security and privacy, the through line is clear. Crypto is moving toward broader institutional integration, one disclosure and one bridge at a time. So that's a wrap for today's Kanga Crypto News. If you enjoyed the show, please like and share and subscribe to stay current with all the latest news. As always, stay informed and stay ahead in the blockchain world. See you next time.
We are Kanga, beyond crypto.